Well, we have held out and not succumbed to global cues for a goodish bit. Today, the SGX Nifty is indicating only a 0.3% fall compared to a 2% fall that we saw in Wall Street indices and almost that much in Asian indices this morning. The SGX Nifty is still showing only 0.33% in terms of cuts. So do we dip but don't go all the way down like the others? Those are the questions that investors will want to know. And let me invite Ashwini Gujral, Mitesh Thakkar and Prakash Gaba. Good morning, all three of you. Well, Ashwini, what's the call on the index itself?
Well, good morning. And, you know, this buying the gap downs, this can work for, 2, 3, 4 days. But finally, the prices are now way overextended in terms of the averages which we consider as equilibrium. So it's only a matter of time if these sort of falls continue on Wall Street that we will also come down, because finally our good news may end. So on financials, etc., wherever there's all kinds of good news, try to take some profit off. I'm not saying they are going to turn very sharply or go down. But what I'm saying is that, these stocks need consolidation, maybe some amount of correction, which could be relatively large. So at this point, rupee at, 69, 70, 70, etc., all kinds of great news priced in. So I'm interested in buying the rupee sensitives which have come off. I did that all day yesterday, because what can change from here? So my sense is that the good news is more or less done. Each time you get up to 11,000, keep taking some profits off. We will get our share of correction at some point, and then you should be buying these financials to a better extent. Meanwhile, I think individual mid caps will continue to do their own thing. So large cap will remain choppy. Every day you gap down, every day you come back a bit, that sort of action. But mid caps is where, maybe some sort of longer term bottom has been made.
Okay, Mitesh Thakkar and Prakash Gaba are also with us. Mitesh, hi, good morning. Would you agree that it's better to just take some profits if you have it and, not go fish hunting for long positions, at least as of now?
Good morning. See, I'm not in a hurry. I think, yes, we have run up very nicely from 10,330, but also is the fact that there's no structural weakness creeping into the charts as yet. So for the timing, at least, the buy and dip strategy, as Ashwini also said, might work for next few days. But yeah, of course, if we keep failing and the indicator structure turns weak, maybe then I would be more worried about long positions. But for the timing, I would maintain a positive bias. I think 10,850 or 830 zones is a very strong support zone, and as long as that is not being violated, I would be more of a buyer on any kind of declines. On the stock specific side, I have also clearly long bias. So both the indices, the Nifty and the Bank Nifty, and stocks, I think if we get dips, we would look for more of buying opportunities as of now. But that you can always change in the next 2 days, and I still believe that before weakness creeps in, we might head towards 11,050, 70 on the upside. Okay,
so what would you define as a dip, Mitesh?
So like yesterday, Lata, we got to about 10,880. I think anything close to about 10,900, 10,875 zone would be good buying area, and your stop loss should be below 10,850.
Okay.
And Prakash, what about you? Good morning. What would the outlook be for today? I mean, yesterday was actually a good day, right? I mean, we managed to outperform quite a bit.
Good morning, Sonia. Yes, in fact, yesterday we bounced from a very strong support of 10,900 zones. That is a very strong support zone to work with, 10,912. As long as that holds, I think the trend is still intact, but has not been compromised. Upside to maybe around 11,084 still on. That's the target that I've been maintaining for a while. I think I still maintain that. So I wouldn't really worry about it. We might get dips, we might see consolidations, we might see sideways move, because we have run up for around 7 or 8 trading sessions in a row and massively with gaps as well. So sideways movement doesn't worry me, but as long as 10,900 holds. On the Bank Nifty front, I would say that 27,175 zones are very strong support zone to work. As long as that holds, then maybe we could have a nudge at 27,503.
Okay. Well, yeah, actually, I take the point, the worry that Ashwini is putting on the table, that you can't be a counter and discount the same thing for a very long time. At some point in time, the equilibrium breaks. For instance, the currency has gotten so strong that's actually negative for any economy. And today you have this massive ECB limit getting raised by $34 billion. It's not that the money is going to come today. The money may take a very long time coming. But the point is that any further strength in the rupee can actually be counterproductive to the real economy. Now, when does the financial sector take note of it? We don't know. But you're right, there could be too much of a good thing. Ashwini, which stocks would you trade?
Well, CSC is a buy with a stop of 710, target of 735. I think energy space is starting out a fresh rally. Today, I would think that if HP and BP rally some more, they would take out that day when that 1 rupee was hiked. So that way they are making significant lows and are now creating a long-term bottom. So HPCL is a buy with a stop of 239, target of 252. L&T Finance is a buy with a stop of 154, target of 166. Lupin is a buy with a stop of 848, target of 880. And DHFL and the other housing finance guys, they could keep moving up. This is a buy with a stop of 234, target of 248.
Okay, a lot of buying actually seen in the NBFCs, right, lately. I mean, this week has been good for them. Prakash, what would your stock ideas be today?
I'll start with Equitas. That looks good. I think we can see an up move to around 132. Good base formation and an up move has started. Stop below 120. Then DV's lab also is looking good. I think we have seen some kind of a consolidation. Up move should commence here. DV's target that I have is 1550 to 1560 zones. Stop below 1490. Defensive bet actually. And I like ITC. I think ITC has been up for a while. It's continuing up. Target on the upside 288. Stop below 280. And finally, I like Jain Irrigation. Seen a good up move, consolidation. Up move started yesterday once again. Target on the upside 73. Stop below 66.
Okay. Well, Mitesh, I want your stock list, but if you are tracking it, I want your view on the dollar rupee as well. But first, your stocks.
Okay, I'll start with stocks then. CESC had a good price and volume breakout yesterday, so that's a buy with a stop at 704 for targets of 750. L&T also made a fresh swing high, buy with a stop below 1430, look for targets close to about 1495. And after a long time, Tata Motors could possibly now give some kind of a stronger bounce back. The indicator setup is turning slightly positive, so buy with a stop at 173, look for a first target of 185. And I have a cash stock on list, that's Bajaj Corporation. That's a buy with a stop at 366 for targets of 395. And on the currency, Lata, I think if you recall a few months back when we were heading towards 69, 16.5, I think that was a very difficult level for the dollar to get past or rupee to break below that level. I think 16.5 should be a very key spot for the dollar. And I think in case we don't break that, then I think we might give a bounce back from here back to about 71.5, 72. So 16.5 is the level which I would watch very closely. In case the rupee fails to appreciate beyond that, then I think some depreciation might happen in the next few weeks.
Okay, that could turn the tide for some of the stocks as well, especially some of the IT stocks. And Ashwin even alluded to that, the rupee sensitives. But let's get more opinion on that. The dollar index itself has fallen to a 1-month low. And that also is one small reason why the Indian currency has appreciated 6% from the record lows of 74. Now, of course, below 70 to the dollar. Irene Chung, the forex strategist at ANZ Research, joins us on the phone line from Singapore. Good morning, Irene. Thank you very much for joining us. Well, it's just pouring good news for a rupee bull. It's not just the minor dollar weakness, it's the massive weakness in crude. How are you looking at the Indian currency at 69.7 to the dollar?
Yeah, I think I agree with the previous speaker that the 69.6, 69.5 is a very key support level. Technically, that has held in the past 5 months. So we are actually coming very close to that level. So I'll be a little bit cautious, But of course, if it does break, it means that it could open up, the window for further downside in dollar INR towards the 68 or slightly above 68 level. So I think this is important. But I just want to highlight that so far the Indian stock market has been doing very well. And that has basically bucked the global trend of falling stock prices all over the world, and I'll be watching the stock market closely to see whether it continues to outperform or there would be sort of a consolidation coming up in the Indian stock market.
Okay, so you're looking at even a level of 68 on the rupee. That's the kind of appreciation perhaps that we're staring at. Irene, hi, good morning, and thanks for joining us. I wanted your views on the dollar index. It's hit, a 1 month low of 96.2. And a lot of people are talking about how the US yield curve inversion or the impending potential US yield curve inversion risk could drag the dollar index down further. Your own thoughts on that?
Well, I think basically the market psychology now is that the market is really concerned about what's going on in the U.S. economy, and also what it means for the Fed policy going forward, whether they should be still doing the unwinding of the balance sheet. So I think the dollar index is also coming close to a critical level. It has been actually on a slight up channel in the past couple of months, but we are actually hitting the support level as well. And I think if there are further weakness that we see in the U.S. data, you could actually see some further weakness of the U.S. dollar. But at this point, we see whether it will bounce off. If it breaks lower, then I think we could see actually the dollar underperforming in the near term until we see some stability in the stock market in the U.S. But so far, the sell-off has been relentless, happening there. So it's a big concern for the market at this point.
Okay, Irene, I want to revisit that 69.70 mark, which you and our previous guest, Mitesh, were making. Last time it went to that 69.70 level, it was mid-August. At that time, crude had fallen from 86 to 71. But now we are looking at, 54. That's a big advantage for the Indian current account deficit. So should that 69.70 level or support be all that important? As well, a lot of domestic scenario has changed. We have seen Indian bond yields crash to about 7.2 from our almost 8% in August when these levels were reached. We have also seen foreign flows almost turn and now becoming quite robust in the month of December. Putting all this, do you think that 69.70 can be breached?
Well, we will see whether it will be broken or not, but I would think it's a very important level to watch. If it does, it would open, as what I said, room for further downside in the pair. But what has been, of course, crude is one major reason for the fall in the dollar INR, but we also have some other issues, which we are looking at. Perhaps, the political front, developments on the political front, etc. And so whether there is enough momentum to carry dollar INR further down remains to be seen. Because I think stock market is important because we have seen about 1 billion inflow into the Indian stock and the bond market so far this month, and it's basically working against the global trend, where we have seen outflows from many markets and selling off in many markets. And so, whether the positive about crude prices, lower crude prices, is already fully reflected in the currency, that yet to be seen.
So finally then, for 2019, at least for the initial part of it, what's your own estimate? What's the pecking order looking like in terms of emerging market currencies? Which one would top your list?
Well, you're talking about Asian currencies. We look at Asian currencies. Well, basically, we feel that this volatility in the market probably would carry on into early next year. But among all the currencies, we are quite comfortable with the Sing dollar, given that if there's high volatility, Sing is always looked at as a relative safe haven in Asia, apart from the Japanese yen. So we feel that if volatility continues, the Sing probably would be more resilient compared to most of the other currencies. But we are more constructive on Asian currencies from middle of next year, given that by then the Fed should be done with its tightening cycle, and further weakness of the dollar is going to happen. So we are constructive on Asian currencies starting middle of next year. Near term, we still quite like countries with current account surpluses like the Sing, and also to some extent the other currencies that we feel would be, well, definitely the Japanese yen is our topic in the near term.
Okay. Thank you very much, Irene Chung.
You're welcome.
The important takeaway is that despite the kind of chaos you're seeing, not chaos, the fall you're seeing in Wall Street indices, she's constructive on Asian currencies. Usually when there is a huge meltdown, there can be fears of money going away from emerging markets. This time that's not the case. On the contrary, EM currencies, the experts seem to be constructive.